All right, Vivek, thanks a lot for that. So that's about, Indigo, Interglobe Aviation. But now we're talking about Insight Edge, and this is our special segment. I'm looking at Bata today. Why is that? Because it's extremely interesting, what the company is doing. Over the last couple of trading sessions, we've seen some weakness in the stock, and that's on account of softer than expected numbers. We spoke to the management today. They said that there was weak demand in the sub 500 to sub 1,000 rupee footwear category. In fact, revenue was driven by price points about 1,000 and 2,000. And that, reinforces what everyone else has been saying, that there has been a divergence where the premium product is doing extremely well, but it is the lower end which is facing some problems. But the raw material pressure has eased for the company, and the 5,000 crore revenue target by FY25 is still not out of reach. That's as far as the business is concerned. On that, brokerages have written, ICICI Securities has cut their target from 1,700 to 1,500. Why? Because they say while focus on premiumization, brand perception and distribution are right steps, there will be some challenges. And footwear as a space itself does not have that sort of scarcity premium for Bata, because now we have Campus, we have Metro, we have all the other players as well. So that scarcity premium may not return. Motilal Oswal likes their plans to add around 150 to 170 stores. And the important part, however, from the management's commentary today was that they are looking to enter the apparel business to leverage their retail presence. They will share more details on this in a few months, but that, I think, is the most interesting thing, a footwear maker entering apparel, because globally that's what happens, right? If sneakers are doing well, people are perhaps looking at athleisure as well.
But it's also a very competitive space.
It is a competitive space.
It's a very low margin space as well initially, right? When you start off to penetrate the market.
It is a higher gross margin space. Yes, low margin because you have to invest in marketing, etc. And I think
they would be sourcing it, obviously.
They would be sourcing it. The other thing that works for Bata is that if you're looking to enter athleisure, from scratch, you have to build the retail platform, etc. Here they do have the retail platform already, so they're just sweating on those assets, and it also increases their TAM. In consumer language, TAM is total addressable market. Footwear category size is $22.5 billion right now, likely to be closer to $50 billion by FY25. Apparel category size is right now close to around $24 billion. It's likely to be around $35 billion. So, even if they were in footwear, by 2025, the total addressable market for them would be $50 billion. And now it turns out to be $85 billion. And in that, athleisure itself is the fastest growing, currently 20,000 crores and likely to be almost 41,000 crores as an overall market by 2025. So they have a strong brand out there. Power is a value brand for sports. Let's see whether they can actually extend that into, sweatshirts and gym wear, etc. as well.
Okay, that'll be really interesting, right? Considering how that whole athleisure space is picking up in India, at least. But earlier today, we had a chance to speak with Gunjan Shah, who's the MD and CEO at Bata India. He spoke about how the company's plans to enter the apparel business, which I guess could be the next growth trigger. Take a look.
There is a certain amount of sluggishness that you see in the price points which are below 1,000 and especially below 500. And that has seen some amount of sluggishness right from about September onwards. I think it's a cumulative effect of the kind of inflation that consumers have seen overall and the price increases that we have taken to manage this inflation from a footwear perspective. So hopefully that should even out, but that is how we see it right now. Apparel, we had started off on a project on apparel. It's a very attractive category. It's very adjacent to the kind of consumers who walk into our 2,000 odd points of sale. Right. And that has an attractive both in terms of growth as well as in terms of profit pool. We had started a certain pilot pre-COVID. We had kept it on halt. We are now aggressively restarting it. Watch this space. Hopefully, we'll have an update a few months down the line.
Okay, so 5,000 crore revenue by FY25 is not out of reach. That's the kind of numbers that Bata is looking at. By the way, the market is doing really well, so don't lose sight of that. The Nifty is now up 160 points and a lot of stocks hitting fresh highs. So, names like